Our market monitor guest tonight is bullish on stocks, but says investors should prepare for stocks to pull back in these last trading days of the year. He's Peter Sorrentino, Senior Portfolio Manager at Huntington Asset Advisors. So, Peter, it sounds like a little bit of good news, bad news. Tell us how much of a pullback you're expecting over these next couple of weeks, and then how do things look for 2014?
Well, thank you, Susie. We really look for a rotation in leadership. As you pointed out earlier segment, the value dividend paying segment has had a great run the past couple of years. And with softening in commodity prices, we think we're going to see a rotation in leadership. And that will lead to, we think in combination with the tax selling that usually occurs at this time of year, some weakness in the leadership as we get the new leaders emerging. And again, in one of your earlier segments, you talked about technology, and we think those are the segments that are going to see cash flow and the ones we want to be in into next year. But in that transition, we think it's less than 5%, but we do see some potential weakness as portfolios get repositioned and investors take advantage of whatever tax opportunities they have in their portfolios.
The biggest pullback we've seen all year, we've had a few 5% pullbacks, but it's been forever, it seems, when we last had a typical 10% correction in this market. You still don't see that in the offing either, do you?
We don't. Really, with the softening of commodity prices, especially on the back of the news today from the ethanol rebate, if you will, back to the markets, that we don't see commodity prices threatening anytime soon. Interest rates are effectively a reflection of inflation pressure. With that taken off the table and a pretty clear understanding of what's going to happen with Fed policy, we don't see much of a threat to the market in here. And the data we've been getting coming out of the private sector in terms of the economy looks pretty good and looks to be picking up some momentum. So we think the economy holds together.
All right, Peter, let's go down some of the stocks that you are recommend. You were talking about tech a moment ago, and you have EMC on the top of your list. Pretty much the stock is trading at the same level it was at the beginning of the year. Why do you like this, and where do you see it going?
Again, this is a growth name, and it's one that investors really have been passing by. It doesn't offer a big dividend, no big buybacks, no special activity. But looking at their suite of products, especially in the area of data storage, disaster recovery, this is the kind of name that as business expands, this is a necessary going forward. And there's a lot of regulation going out now with regard to businesses and their ability to come back from a disaster. And when we see the security issues, data today coming out that the Options Exchange Board had a problem. So we think security and disaster recovery become big themes, and EMC is really well positioned to take advantage of that.
You like natural gas, the fact that you're thinking we're going to see much higher prices down the road, and a company you feel that will benefit is Schlumberger. Why?
Well, because prices collapsed so much in the last couple of years, we really saw North American drilling activity fall off dramatically. We view that that's going to come back very strongly. They've had good success outside the U.S., outside North America, and we think that they'll continue. And we like Schlumberger, very high quality, strong balance sheet, and their array of products really speak well to the type of activity that we think you're going to see in the North American drilling environment in the year or a couple years ahead, really.
All right, let's talk a little bit about another stock sort of in the energy area. Chicago Bridge and Iron, CBI is the ticker there. Stock almost has doubled. It's about $80 now. What's your target on this, and what's the attraction?
Well, this is a name that is an industrial, and a lot of people think of this as one of those that you would probably want to avoid after the run it's had. But the natural gas story, as it comes back here in North America, and we move from essentially being domestic consumption to an exporter of natural gas, Chicago Bridge and Iron has a huge technology footprint in both the liquefaction and gasification of natural gas. They benefit not only from the projects being built here in the North American market, but also those around the globe. So as natural gas continues to expand in terms of a replacement fuel for electricity generation, we think Chicago Bridge and Iron is really just in the right place to benefit from it.
Okay, terrific. Any disclosures, Peter?
Do not own any of the names personally. We do own them in the funds, and we own less than 5%.
Okay, great. Thank you so much. Have a great weekend. Thanks for coming on the program. Peter Sorrentino, Senior Portfolio Manager at Huntington Asset Advisors.